what could trip up the EV revolution?
What could trip it up is it needs lithium, nickel, cobalt. So you can manufacture the cars, but if you can't get the raw material components, you could be in trouble.
This will be battery metals, lithium, nickel, cobalt.
Prices of lithium battery materials are rising fast. Headlines talk of shortages, reliance on China, and the need for localized sources of secure, sustainable supply. Will auto and battery manufacturers vertically integrate to mine and process their battery materials as Ford did in the 1930s? RK Equity focuses exclusively on critical minerals projects in support of EV and battery producers in North America and Europe.
In this series, we will be looking into several development companies who seek to address the risk and opportunity identified by Byron Wien and Chamath Balapatia. These videos are based on several independent research notes which you can access on rkequity.com and is for information purposes only and not investment advice. This is Equity Overview with Rodney Hooper.
Welcome to Rockstock Channel. Today we start a new series of individual short videos of raw materials companies that we think should benefit from the rising demand of electric vehicles, energy storage, and other clean energy technologies. In today's episode, Rodney will present an overview of Frontier Lithium. But before we begin, we should note that Rodney and I and RK Equity are advisors to Frontier Lithium over the past year and also have equity interests in Frontier. We have not been paid to prepare this video, and all Rodney's comments and research are his own independent opinions. Rodney and I are not financial advisors nor broker-dealers. This video is for information purposes only and should not be considered investment or financial advice. Please do your own independent research and read the disclaimer at the end of this video or on RK Equity's website.
There's a reason why we're starting the series with a lithium company. And that reason is because lithium is the irreplaceable element in a lithium-ion battery. Thanks to exceptional EV sales in 2021, likely somewhere in the 6.3 to 6.5 million units, it's become the bottleneck for future EV sales growth. We at RK Equity believe that the battery-grade lithium market is in a structural deficit and is likely to remain in that state for at least the next few years. To reach their EV sales ambitions, OEMs are going to need new supplies urgently. Time is of the essence, but so is quality when it comes to battery-grade lithium. In mining, they say grade is king and width is queen. And Frontier Lithium has both those and is located in a safe jurisdiction, which makes it, in our opinion, a unique lithium project. Lithium prices, certainly the average weighted prices, are up 4 to 5 times over the last year. Frontier is an Ontario-based company and it owns 100% of the PAC Lithium Development Project. They've got 2 deposits that they've initially outlined, the PAC and the Spark. It's listed on the Toronto Stock Exchange under the ticker symbol FL.V, and it also trades on the OTCQX LITOF. The company has a market cap of $340 million US, ranking it around 19th on our lithium development company scoreboard, the RK Equity monthly scoreboard that Howard puts out. So let's have a look at what the key features of Frontier Lithium are. In terms of resource, we think it's a top 3 resource globally from a high grade, low impurity and consistency perspective. The deposit is, to my mind, very similar to Greenbushes. Greenbushes being the Western Australian deposit jointly owned by Tianqi and Albemarle. It's the longest running high-grade mine and largest high-grade hard rock mine in the world. And it's responsible for being fed through to a number of converters that produce the most battery-grade lithium in the market. Having consistent grades, high grades and low impurities across a deposit are the key characteristics and are the hallmarks to improve the likelihood of achieving battery-grade chemicals, and that in the end is what is needed. If you look at what the lithium market is broken down into this year already, EV battery represents a very high percentage of demand, and total batteries, all needing battery grade, is well over 85%. So that's the objective. And Frontier has both high grade and low impurity, which are typically associated with achieving that quality. The other thing that Frontier has is the potential to grow the mineral resource estimate to 50 to 60 million tons in the future. Compared to its peers, that would make Frontier the largest North American resource, and with the highest grade means it would have the most contained lithium. The Frontier published a preliminary economic assessment, which is also called the scoping study. It's an early first stage economic assessment of a project. They did it last year. It was based on an integrated plan with spodumene, with hard rock mining to make spodumene, so the minerals, and then to have a lithium hydroxide processing plant as well. It's expected to produce in the region of 23,000 tons of lithium carbonate equivalent of lithium hydroxide. The after-tax NPV from the preliminary assessment is around $1 billion US. And that was based on a $13,500 a ton lithium hydroxide price, capex around 685 million US. That lithium price that they used is 65% lower than the current spot price in China. Those have already risen over 40,000. Frontier is trading at roughly a 66% discount to the NPV. You've got other companies, admittedly slightly more advanced on the feasibility front, but those are trading at between 80% to 100% of NPV. So Frontier at a substantial discount. That should change as it progresses through the various feasibility studies going forward. In terms of cash, Frontier now has approximately 19 million Canadian dollars, and having recently completed a $12 million capital raise. They did it at a price of $1.86, which represented approximately a 20% premium to the prevailing stock price at the time. The other thing that is a standout for Frontier is that they're looking to produce lithium hydroxide, which is likely to represent the majority of the US/North American cathode demand. The hard rock to hydroxide has typically been the lowest cost route to producing the final chemical, and Frontier is looking to go that route, so it should be a low-cost producer integrated, and therefore should make decent operating margins. After expanding the mineral resource estimate to 50 to 60 million tons, Frontier could choose to either expand its hydroxide production to roughly double, 46,000 tons per annum, or it could sell 250,000 tons per annum of spodumene concentrate, 6% to third parties. Depending on which route the company chooses, that would likely increase the NPV from $1 billion to $1.5 to $2 billion. So a meaningful impact. The company is in the process of drilling out and looking to achieve that expansion. The other thing that Frontier is doing is it's partnered with XPS, which is a Glencore subsidiary, and operating a hydroxide pilot plant, so a deep pockets experienced partner. In addition to lithium hydroxide, Frontier is uniquely positioned through the high quality of its ore body, but more specifically through the low iron content in the packed deposits, to potentially break the monopoly that Albemarle has in the technical grade spodumene concentrate market that services glass and ceramics. Technical grade spodumene concentrate prices were trading at $1,500 when chemical grade spodumene prices were around $600. Those are now well over $2,000, so it's likely you're going to see an even higher premium for technical grade spodumene. The margins, given that Frontier has an operating cost in the order of $340 or $350 a ton, would be exceptional. We think Frontier has a high permitting probability, given that it has local First Nation support, including a board member, and also because Canada and Ontario are both very supportive of regional EV battery metal development. The key risk to Frontier and for the project is infrastructure, in particular road access and power. The phase 2 government funded power line development targets completion in 2023-2024. Phase 1 is completed. The final crucial piece of the infrastructure is the all-weather road access to the project. Currently, the project can only use the winter road for approximately 3 months a year. Either the winter road can be upgraded to all-weather, or the access road used currently for the power lines can be upgraded to all-weather. The nearby First Nation settlements are supportive of the road upgrade and are collaborating with Frontier. In May 2021, I wrote a research report on Frontier outlining the project in detail and the estimated fair value. At the time, I had an estimated fair value of around $240 to $484 a share. By the second half of 2023, at the time, Frontier was trading at 80 cents. Frontier were able to expand its resource to 50 to 60 million tons, which is give or take double where it is now. Then my fair value estimate rises to between $3.77 and $7.80 a share. Frontier has already almost reached the lower end of the fair value range, and it's trading around $2.20. And that's through a combination of the market recognizing the quality of the project and higher lithium prices. As mentioned, Frontier used $13,500 a ton as a long-term hydroxide price in its PEA. Following the recent steep rise in battery-grade lithium prices, lithium peers are now using anywhere between $15,000 to $20,000 a ton, and some, like Liontown, materially higher. Frontier's NPV and internal rate of return would improve substantially if they were to use a higher price assumption. What are the future milestones in 2022 and slightly beyond? They include advancement of the lithium chemicals pilot plant with XPS, the Glencore subsidiary, the completion of a feasibility study during 2022, improving on the PEA estimates, and as mentioned, higher pricing for lithium is likely to mean substantially higher NPV and IRR. Infill drilling to convert inferred resources to measured and indicated, particularly at Spark, and potentially to expand the resource to 50 to 60 million tons. Advance the demonstration plant and a potential offtake agreement from battery and or glass customers. Successfully run a demonstration concentrator and chemical plant, and confirmation and or a commitment by the provincial government to upgrade either the winter road or the power line access road.
Thank you for watching this video about Frontier Lithium. Rodney and I plan to release management interviews with Frontier and other critical minerals developers in the near future, so please make sure to click the subscribe button to receive notification for when they are released. And if you have any questions you'd like to ask of Frontier, please make sure to put them in the comments and we can bring them up for future interviews.